is Jim Velasquez, and I'm going to introduce you today to the money machine concept. It's a tremendous concept that allows you to create a tax-free income stream starting in year number 6. Today's market affords us a tremendous opportunity to buy properties from banks. Banks do not want to hold on to real estate. They want to sell it. They want to get their money and re-employ it, put it back to work. So we're going to show you, we're going to coach you and teach you how to buy these properties. We're actually going to help you acquire these properties and then put them into work into what we call the money machine. Let me write that down here. It's the money machine. Now, the way that this works, obviously, is we're going to buy bank-owned properties. I said that already. And what this is going to represent over here is the years that we are acquiring properties. And this little structure that I'm putting up here represents a house. So what I'm saying, year 1 through 5, we're going to buy one house each year from a bank. And we're going to show you how to do that. Now, the house value, first of all, we're going to buy 3-bedroom, 2 baths. We believe that that's the best thing to get into. Easy to rent. Everybody enjoys and likes that type and style of house. So $150,000 is what the value of the house is going to be. But remember, we're buying it from a bank, and we're going to buy it at a very reduced price. We're going to pay $100,000 for that house. The lender that is going to help us acquire this house, we're going to have to put a minimum of 20% down, which means we're going to create a mortgage of $80,000. That mortgage is going to cost us $500 per month, principal and interest. And a property such as this is going to cost us about $200 a month in taxes and insurance. So we're going to put taxes and insurance here. That's going to give us a total of $700 a month in outlay to acquire and purchase one property per year. Now, what we're going to do, obviously, is we're going to get a tenant, and this house will probably rent for right at about between $900 or $1,000 per month. We're going to use the lower number. We're going to say $900. Now, if we rent this at $900 per month, and we take the $700 that it costs us, it's going to give us a $200 a month cash flow. Cash flow is good because what cash flow does is it comes to us whether we get up in the morning and go to work or not. It's passive income. It's money that we're creating that we're going to get to enjoy. Now, we're going to do this year number 1 all the way down to year number 5, and we're going to continue to rent them out. And by the way, we also do property management, so we're going to help you in managing these properties as well. So don't think that it's a big deal. You can do this yourself, one property per year. But we do offer a complete solution, so we do not only the acquisition side with you, but as well as the management side. So, now, here's the beauty of how the money machine really comes into play. We've already purchased the property at a great price. The property's paying for itself. As a matter of fact, it's giving us income. Now what we're going to do is we're going to come in year number 6, and we're going to take the property that we bought 5 years ago, and we're going to refinance it in year number 6. Now, here's how this works. The property, when we first acquired it, had a value of $150,000. So we're going to use a number of 3% appreciation. Year number 6, the property is going to be worth $170,000. We are going to put a new mortgage of 80% on that property, the one that we acquired year number 1. It's going to give us a mortgage of $136,000. Now, what we have to do is we have to pay off the $80,000 mortgage that we acquired when we purchased the property year number 1. Well, remember, we have a tenant in the property, and the tenant is paying rent. The tenant is reducing this $80,000 mortgage by about $1,000 a year. So in a 5-year period, we've reduced that mortgage by $5,000, thus we owe $75,000. Now, we have to bring that down over here, and we have to pay off that $75,000. So folks, that's going to leave us with $61,000 that we can do whatever we want to do with. By the way, IRS, our government, says that we don't have to pay taxes on borrowed money. We have actually borrowed this money, so we pay no taxes on it. And remember, the tenant's continuing to pay this arrangement here for us. So this is $61,000. You can take a vacation. You can pay for your college, your children's college. You can reinvest it and acquire other assets with the $61,000. So you can see how this truly is a money machine. Here's another thing I want to put as a concept to you. Think about if you did 2 houses in year number 1. Year number 6, you could theoretically have $122,000 of money to do whatever you want to do with. Now remember, we did 1 per year. So year number 2, we come down for year number 7, 8, 9, 10. So basically each 5-year cycle, we do a refinance, and we continue to have our money machine. It's a simple technique, and it works. And folks, year number 6 comes down to year number 11. 5 more years, we repeat the cycle all over again. This is a tremendous concept. We've been employing this concept for countless numbers of years, and it works in this market. As a matter of fact, it's a great opportunity right now to acquire these properties at a very, very reduced price. Tremendous opportunities out there. Folks, we hope you enjoyed listening to the Money Machine concept. Hope to meet you face to face and show you some tremendous strategies where you can employ your money and create wealth. Thanks for tuning in.